Good morning, everyone. I'm calling in today from foggy Grover Beach. So we are at a whopping about 65 degrees this morning. I'm hoping you're enjoying some much better weather, but at least it's not 114, so I guess I can't complain too much. I'm Lorna Whitaker. So many of you know me, and maybe some of you don't. I'm a business consultant. I'm a coach. I'm a financial strategist. And one of the things that comes up all the time as a question for entrepreneurs is when should they become a corporation or should they become? We really, this is something that they ask all the time. It gives them a lot of concern. It is less concerning than you would believe. So I would really like to cover what it is that you want to know about it so that you can make an effective decision for your business, so that you stop the worry and you know with a lot more certainty when it's the right fit for you. I'm not an attorney, so I cannot give legal advice. I'm not a tax professional, so I cannot give tax advice. But I'm a business coach and consultant, and I can tell you what it is that you want to know when it comes to making business decisions for yourself. So we're going to get started. I like to keep these really short for you to make the best use of your time and actually my time as well. Um, so CPAs and tax professionals see becoming incorporated from the tax conversation. Attorneys see it from the legal conversation. So I'm going to cover all of these pieces as well as part of this. So what are the structures that are available for you? Well, first there's the sole proprietorship, which is where most business owners start their business. There's a certain amount of liability exposure, but they're very easy to run. They're very affordable. Setup is super, super simple. So, and the taxing is actually fairly simple as well. And then you have the partnership. Now, partnerships, I want to give you a lot of caution about. They're really like a marriage. They're very easy to get into and can be very hard to get out of. And one person can carry the full load, do all the work, okay? And the other person is entitled to half of the money and can have full exposure to the liability. So having a written partnership agreement is super important. If you enter into a business with anyone that you are not married to, you should have a partnership agreement in writing. And a simple, this is what we're doing kind of agreement is not sufficient enough. It does need to cover who's going to do what, how the money is going to be shared, and how you're going to dissolve the partnership if that's something that happens. So very important. And then there's the LLC. LLC stands for Limited Liability Company. Now, a number of years ago, maybe a decade ago, they didn't offer the same kind of liability protection that a corporation did. But today they're very, very powerful and they have lots and lots of flexibility when it comes to legal protections, the sharing of the earnings and the liabilities, and also with regards to the tax benefits and the way that they can be set up. So you want to ask both your tax professional and your attorney about which is the better model for the LLC. And remember, they come from different viewpoints about what is the best fit for you. You as the business owner knows more about your business than anybody else. You care more about your business than anybody else. Make these decisions based on where you are today and where you see your future. And we're going to get into those 5 considerations here right away. Now, the other corporate models are the C corporation. Every business, every corporation starts its life as a C corporation, and then you make certain choices about whether you wanted to be treated as an S corporation. An S corporation, the C stands for Chapter C of the IRS code, and the S stands for Chapter S of the IRS code. It's really only about how you're taxed. Okay, that's all that that stands for. So people that I have met over the years, I'll say, well, are you a C corporation or are you an S corporation? And they'll go, you know what? I don't know. So I ask you to think of the S as standing for self corporation. So S as in self means that you are taxed as yourself, and the C corporation is taxed under its own corporate structure. So S corporation is a really, really good fit for many, many business types and entrepreneurs. So S corporation is a really good model, as is the LLC. Now, there's another corporate entity out there called the B Corporation. It only stands for the legal structure, that it's a benefits corporation. There are no particular tax benefits, but there are some credibility benefits that are super useful for you, because B corporations are a stand for being of a benefit to the community, to the environment, to individuals. I mean, they really have a big platform upon which they stand. And then you have the nonprofit, and most of you are familiar with the nonprofit. I like the B Corporation for many reasons over the nonprofit. Nonprofits have a lot of legal structure and financial responsibilities that can keep you, as the person who creates the nonprofit, out of the picture. So one of the considerations that I say if you're thinking about whether you want to be a nonprofit or not is, if the people you serve cannot afford to pay for the services that they receive, then basically you are probably a good fit for a nonprofit. However, if the goods and services that you deliver can be paid for by those that you serve, well, then a B corporation might be the better option for you. So really research both of those so that you know what you're getting into before you make those decisions. So this, I think, is a really important thing for you to know and do. So what are the 5 considerations? Well, the 5 considerations are this. They're very simple, okay? The tax benefits. Will you receive any benefit from becoming a corporation? So both the LLC and the corporate models will allow you as the owner to receive a salary, and it will make that expense a burden, okay, a deduction to the business. Sole proprietorships do not have that feature. Your net income is fully taxable for self-employment tax and income tax. So the corporate model, both the LLC when taxed as a corporation, and the C corporation and the S corporation, both allow you to receive a paycheck that becomes a deductible item for your business. This is a huge value to you and can offer a lot of tax savings and benefits. So people ask me, well, when would I know the right time to do this? Again, talk to your tax professional about this. But the rule of thumb falls into this area, and I have asked tax professionals for this information. And that is that when your business has a gross income of about $100,000 and a net income of about $70,000, you are right up against that place where talking to your tax professional about becoming a corporation is a really sound conversation. Now, one of the reasons that I'm doing this little Facebook Live today is that in the fall of the year is a great time to start assessing whether maybe next year you should form a corporation. So now you can get it started in the next few months and be ready to go in January of next year, to be ready to go to operate under a different legal entity, which would be an LLC or a corporate model. What is another benefit and consideration for becoming a corporation, a corporate model? And that is liability and protecting your assets. Now, right out the door, I'm going to tell you that insurance is probably the only way that you're going to give yourself peace of mind so you can sleep better at night. You need enough insurance to cover your personal assets. Okay, hear that? Personal assets. and make sure that you are protected from the liability that might occur from running a business. It's real important for you to look at your business and say, what kind of liability am I exposed to? Do I need to have liability protection? If you're starting a business with some exposure, then starting at as a corporate model and not a sole proprietorship is a good choice to do earlier rather than later. Do I have liability that I need to protect myself? But even as a corporation or LLC, you want to be sure you have the right kind of insurance in the right amount. And the rule of thumb is protect the assets that you own personally. Okay. The other consideration, credibility. This one is really fun. So a sole proprietor has a business name. They're usually using a fictitious business name for their business. And this gives them a name, but maybe they want to look bigger. Maybe they want to have a bigger presence. So being a corporation is a really great way of giving you credibility, probably the only credibility that you can buy. Because on your business card, it could say COO or CEO or president instead of just owner operator. If you're an engineer, for example, and you're fresh out of college, you may want to start your own business and you may want to look like you've been in business longer. Having a corporate model is a really great way to get that kind of credibility. I really love it as an example of how we can use a corporate structure to create um, a, a more longevity, a look of more longevity. So that's really a great one. And then there's name protection. Of the two reasons why I think businesses should become corporations earlier rather than later. The one would be liability protection, and the other one is the name protection. You've thought long and hard about the name that you want for your business. You're really excited about it. You really love it. But if you file as a sole proprietor, your name is only protected in the county in which you file your fictitious business name. What if you want more than that? If you want more than that, you could become a corporation and you can protect it at a state level. And you can file corporation documents in multiple states to give you more protection under those states. If you really want to ramp up your name protection, go ahead and get it trademarked. It's easier to do and more affordable than you may be aware of because you're only doing a word protection. You're not doing a logo protection. So talk to an attorney about it. Find somebody who knows how to do it or do it yourself. Do a little research and file your paperwork. It's a process. It doesn't happen overnight, but you do want to find a way to protect that name. So name protection is a great reason to start a corporate model sooner rather than later so that you can protect it at least at a state level and not just at a county level. One more consideration of the 5 is investment needs. So if you need capital for your business, investors do not give money to sole proprietors. And they're not going to give large sums of money to S corporations either because there's this liability and this exposure. However, LLCs can get investors. That's one of the reasons it was originally started. A limited liability company allowed people to not have liability, but they could put money in to start or pool their money together. So there were lots of good reasons to create LLCs for businesses. If you really need to have investors, then you're going to most likely need to look at becoming a C corporation. A little word of to the wise, and that is investors want something in return. They do not give you money to just give you money. They may want to give you money and then want to have control or say in how you run your business. So that is an important consideration for you to go, do I really want to do this? Are there other ways that I could get the kind of startup money or growth money that I need? And those can be done through various loans. The SBA has them, Small Business Administration. You can get personal lines of credit, things like that, to help you grow your business. But be very mindful that investing money, investors with money, they want something in return. Now, some of you have heard the term angel investor. Angel investors are typically interested in the B corporate model, the benefit corporations but they also want their money back. They also want a return on their money. The final consideration for when you're thinking about becoming a corporation is really to think about what it's going to cost to create it and to maintain it. Now, the cost to establishing them, anything beyond a sole proprietor, there's money involved. You have the legal paperwork that has to be set up, the filing fees that have to be done, and then you also have separate tax returns. Additionally, while many sole proprietors can get by with very minimal bookkeeping, that is not true for the corporate models. You must maintain your books in accordance with accounting protocols and best practices. A failure to do so may allow it to look like you're not really running a corporation. And then that insurance is going to be your only safety net to protect you from what they call piercing the corporate veil. They're going to say, you didn't really run a corporation. You're really pretending to be a corporation. You didn't do anything to act like a business. So we're going to say that you're not a business. So look at the cost that it takes to establishing and maintaining the corporation as to the timing. That's actually a timing consideration. And again, that shows up at around the $100,000 gross income, $70,000 net income. Unless you need liability protection, you're looking for credibility, you're looking to protect your name, and you know for sure that you're going to need investors to help you grow your company. And that's pretty much it for the considerations. I think I've covered everything that you really could start looking at. So remember, there are 5 considerations. Tax benefits, liability protection, okay, name protection, credibility, and finally, if you need investors. So look at those for yourself. Now, before I leave you today, I wanted to share something with you that has been very popular in my world. I have been working with a number of business owners that want to know how to create a financial game plan for their business, how to start making more money. And I have a 20-minute CFO program that's going to give you the tools and exact steps that you need to design a financial game plan for your business so that you can immediately start making more money. So we're going to put the links in here so you can check that out and see if it's a fit for you. But if you have ever thought that you would like to have your business to become more profitable so that there is more money for you, now is the time to really think about it, because the next 18 months are expected to be absolutely fantastic for business owners. I know that the news isn't sharing it. News typically only shares bad news. The good news is that the economy should rebound in a big, big way, because frankly, after every significant event in the world, economies have done very, very well. Businesses have done very well. And you want to be sure that you're postured now to absolutely embrace those opportunities that are coming up. So this is Lorna Whitaker. I'm signing off for today. Remember, go out there and have a business and a life that you love. Thank you so much for joining me today.